Welcome to Crypto News Today. This is your source for unbiased, in-depth cryptocurrency analysis. Today, March 1st, 2025, we're examining a significant development: Bitcoin's recent price surge. Over the past week, Bitcoin has risen approximately 10%, climbing from $68,000 to $75,000, according to data aggregated from major exchanges like Coinbase, Binance, and Kraken. This movement has sparked widespread discussion among investors, analysts, and market observers globally. In this video, we'll explore the factual drivers behind this surge, drawing from market data, institutional activity, on-chain metrics, and expert commentary to provide a clear, comprehensive overview. As of this morning, March 1st, 2025, Bitcoin's price stands at $75,000, reflecting a 10% increase from $68,000 recorded on February 22nd, based on real-time data from Coinbase, Binance, and Kraken as of 8:27 a.m. PST. Trading volume supports this uptick. Exchange reports indicate a 15% rise in Bitcoin transactions over the past 48 hours, totaling roughly 300,000 BTC moved, or $22.5 billion at current prices. This follows a volatile start to 2025, with Bitcoin hitting an all-time high of $109,000 in January, then correcting to $78,000 by late February, per CoinMarketCap. One key driver is renewed speculation around Bitcoin exchange-traded funds. On February 25th, filings surfaced with the U.S. Securities and Exchange Commission suggesting a new spot Bitcoin ETF from a major financial institution. Details remain unconfirmed but echo past patterns. When BlackRock's iShares Bitcoin Trust launched in January 2024, Bitcoin surged 20% in 30 days, adding $12,000 to its value. This time, ETF rumors align with $39 billion in cumulative inflows to Bitcoin ETFs since their inception, per 10x Research. Though analysts estimate over 50% may reflect arbitrage rather than long-term investment. Such inflows historically amplify price momentum, as seen in 2021's ETF-driven rally. On-chain activity provides further insight into this surge. Blockchain analytics from Glassnode show whale wallets, addresses holding 1,000 BTC or more, increasing their holdings by 5,000 BTC this week, equivalent to $375 million at current prices. This accumulation mirrors behavior before 2024's peak, when whales added 7,000 BTC in a month, preceding a 25% climb. Bitcoin's hash rate, a measure of network security and miner activity, has also risen 8% since January 1, 2025, to 650 exahashes per second, per blockchain.com, driven by stable energy costs and new ASIC miner deployments. This reflects growing miner confidence. Macro events add another layer. On February 28th, posts on X highlighted whispers of a U.S. executive order on crypto reserves, tied to President Trump's White House Crypto Summit scheduled for March 7th. Though unverified, such policy signals have historical precedent. During 2021's infrastructure bill debates, Bitcoin rose 15% in 2 weeks amid regulatory clarity hopes. Additional data from BitInfo charts shows a 12% uptick in active Bitcoin addresses this week, reaching 900,000 daily, suggesting broader user engagement. These factors, ETF speculation, whale accumulation, miner strength, and policy rumors, form a multifaceted case for Bitcoin's upward movement. Analysts across the industry have provided detailed perspectives on Bitcoin's trajectory. Charles Edwards, founder of Capriole Investments, noted on February 27th that Bitcoin's Relative Strength Index, RSI, dropped to 25 during this week's dip to $78,000. An oversold signal often preceding rebounds. He stated, "The market may be nearing a short-term bottom, supported by on-chain accumulation, aligning with Glassnode's whale data." Ki-Young Ju, CEO of CryptoQuant, commented on X yesterday, "The bull cycle remains intact, but a break below $75,000 could shift sentiment." His firm reports exchange reserves fell by 10,000 BTC this week to 2.1 million BTC. This reduction in exchange-held Bitcoin indicates lower selling pressure, a bullish signal historically tied to price increases, as seen in Q3 2024 when reserves dropped 8% before a 10% increase. Marcus Thielen of 10x Research offered a nuanced take in a February 28th report. Bitcoin ETFs have drawn $39 billion since 2024, but over 50% of inflows likely reflect arbitrage, not conviction. He cites Abu Dhabi's sovereign wealth fund purchasing $436 million in BlackRock's ETF last quarter as evidence of institutional adoption, tempered by risks of arbitrage unwinding. Matrixport's latest analysis, published yesterday, projects a potential correction until April, unless a significant catalyst, like the rumored crypto reserve policy, emerges. Their head of research stated, "Bitcoin's surge is real, but global trade concerns and a $1.5 billion Bybit hack last week are denting confidence." This hack, the largest in crypto history, targeted Ether rather than Bitcoin. Yet its $1.5 billion loss, reported by Chainalysis, rattled the broader market, with X posts noting a 5% dip in total crypto market cap. Matrixport's data shows Bitcoin's 7-day realized volatility at 45%, below January's 60% peak. Additional expert input comes from Anthony Scaramucci of Skybridge Capital, who told Bloomberg on February 27th, "Bitcoin's absorbing risk-off flows as equities wobble. $75,000 is a floor, not a ceiling." His firm tracks $2 billion in crypto assets, lending weight to his view. Conversely, JP Morgan's February 26th report cautions that Bitcoin's Sharpe ratio, a risk-adjusted return metric, has fallen to 1.2 from 1.8 in 2024, signaling reduced reward per unit of risk. These analyses offer a balanced mix of optimism and caution. Bitcoin's rise contrasts with broader market trends. Ethereum, the second-largest cryptocurrency, dropped 2% this week to $2,149 per CoinGecko, while Bitcoin's dominance reached 58% of the $2 trillion crypto market, a level often preceding bull runs. The U.S. Federal Reserve signaled steady interest rates through Q3 2025 on February 26, per Reuters, reducing appeal for yield-bearing assets and reinforcing Bitcoin's digital gold narrative. China's rumored crypto crackdown, noted on X, may be shifting miners westward, with Bitmain reporting a 10% increase in U.S.-based mining rig sales since January. Global trade tensions further contextualize this surge. President Trump's tariff threats against Mexico, Canada, and China, reiterated this week, triggered a risk-off mood. Bitcoin ETFs saw $2.27 billion in outflows since Monday, per LSEG data. Yet Bitcoin's 10% rebound suggests resilience, possibly tied to its decentralized nature amid fiat currency concerns. Stablecoin inflows also play a role. Tether's market cap grew by $1.2 billion this week, to $119 billion, per DeFi Llama, with 70% flowing to Bitcoin pairs on exchanges like Binance. Bitcoin's funding rates on futures markets provide deeper context. CoinGlass data shows perpetual futures rates averaging 0.02% on February 28, up from 0.01% a week prior, indicating bullish sentiment as longs pay shorts. Rates above 0.03% historically signal overheating, like March 2024's 0.05% before a 12% drop. Bitcoin's 30-day realized volatility hit 45% this week, per Skew Analytics, below January's 60% but above 2024's 38% average, balancing speculator interest and institutional stability. Transaction fees also rose 20% this week to $5 per transfer, per YCharts, reflecting network demand. Additional on-chain metrics bolster this analysis. The Bitcoin MVRV Z-score, which compares market value to realized value, sits at 2.1, per Look into Bitcoin, below the 3.0 threshold of past tops, suggesting undervaluation relative to 2021's 3.7 peak. Meanwhile, Google Trends data shows Bitcoin price searches up 30% week over week globally, peaking in the US and Germany. These indicators, futures rates, volatility, fees, and sentiment, underscore Bitcoin's current momentum amid a complex market backdrop. Thank you for watching Crypto News Today's analysis of Bitcoin's 2025 surge. If you found this data useful, please consider liking this video and subscribing for daily cryptocurrency updates. Your support helps us continue delivering factual market insights. We'll return tomorrow with more coverage.